Welcome to Chapter 2 and our sample problem. I hope that just before you're watching this introductory problem solution that you listen to the video on the chapter overview and you have an idea of what accrual accounting means, and you have an idea of how we're blending chapters 1 and 2 to continue to work the solutions to these problems. So you can see behind me the BA 250 Chapter 2 Introductory Problem Solution. It is to problem 240A on page 109 and 110. So pages 109 and 110. I would encourage you to have your books open. I'd encourage you to perhaps have the solution open so that you can see it, or you might not be able to see everything on my screen, even though I have it as large as I can show it to you. Now again, I want you to notice that at the top we're working again with the accounting equation. So we have assets, liabilities, and stockholders' equity, and those are the three categories of columns that you can see in this document. And you can see that for the assets we have cash, accounts receivable, prepaid rent, supplies, interest receivable, and land. Now you haven't seen interest receivable before, but it's an account, and you need to begin to recognize what these accounts might mean by their titles. Under liabilities, we have accounts payable, salaries payable, and unearned revenues. We have no long-term liabilities. And then under stockholders' equity, we have the contributed capital in common stock, and we have the retained earnings, the earned capital, which is showing in retained earnings. At this time, expenses are still reductions of retained earnings, and revenues are increases or positive signs in retained earnings. Now we have the date and the transactions coming down, and you'll notice that in this problem the transactions have dates. Sometimes they have event numbers, so they problems are presented differently in different problems and exercises, different learning activities. So we will begin with we will work with whatever the page presents to us. Now this particular problem says it's effects of events on transactions, and it says Davis Company had the following balances in its accounting record as of December 31st, 2013. So December 31st, 2013 would be the end of 2013, and we could be looking at those transactions, and or it could be those are the beginning balances for 2014. So in reading the first line, we don't know for sure, but as we work our way on through the problem, we'll see that 2013 is indeed the ending balance, and we're going to work with the next year. So then we have the assets are cash, accounts receivable, land, and total. And so if we look at the worksheet, we have the balance. Cash has 60,000, accounts receivable has 45, and land has 35, just as it says at the top of the problem. And then liabilities, accounts payable has 32,000, common stock has 60,000, and retained earnings has 48,000. So our first job would be to type in these account names and titles and the assets and the liabilities, and then to type in the beginning balances, and then begin to address each of the transactions. So it says the following events apply to Davis for 2014. So for 2014, these are the transactions that occurred. And in the first one, acquired additional $30,000 cash from the issue of common stock. So if you look here, we have January 1, cash is going up by 30,000, and common stock is going up by 30,000. So we enter 30,000 in each one of those columns on the row labeled January 1. The next transaction is April 1, paid $7,200 cash in advance for a 1-year lease for office space. So the transaction is going to be 4/1, and we paid $7,200, so it's going to be negative $7,200. And then prepaid rent is going to be positive $7,200. Prepaid rent is under the assets. One asset is going down, the other asset's going up, so that it keeps our accounting equation in balance. The next transaction says June 1, paid, operative word to know the cash is going to go down, paid $5,000 cash dividend to the stockholders. So it's going to be we're going to put in 6/1. It's going to be $5,000 negative. We're going to go all the way across to retained earnings and put in $5,000 negative, and that would be labeled as a dividend. If we were being asked to put labels in here, we're not, so we'll just have to remember that that's a dividend. So $5,000 down in the asset side, $5,000 down in the equity side, and that keeps the equation in balance. And then July 1, purchased an additional land that cost $40,000 cash. So 7/1, July 1, we'll put that in the date column, negative $40,000 in cash, and then positive $40,000 in land. They're both assets, so the equation stays in balance because the assets are going up in one transaction and down in the other, so the two sides of the transaction keep the equation in balance. August 1, made a cash payment on account payable of $21,000. So made a cash payment. Cash is going to go down by $21,000 because I made a cash payment. And then accounts payable is going to go down because I paid that cash payment on my accounts payable. So I have a negative $21,000 in accounts payable on that same row. Now, the two negatives, one on either side of the equal sign, keep this equation in balance. September 1, so I put in 9/1, received $9,600 in cash in advance as a retainer for services to be performed monthly during the next 8 months. So I'm going to put $9,600 in cash because I received it in cash, and I'm going to put $9,600 in unearned revenues because I haven't done the work for this yet, but they paid me as a retainer for work that's going to be done over the next 8 months. So I'm going to hold on to that, and as I do the work for them, I'll recognize the revenue then, but until then, it's a liability and obligation to do work for that client. So a liability, unearned revenue goes up, and an asset goes up, so they're on different sides of the equal sign, so that keeps the equation in balance. On September 30, so I put in the date September 30, sold land for $20,000 cash that had originally cost $20,000. So cash is going up because I sold something for cash, and land is going down because I sold land. So a bracket around the land, $20,000, and a positive $20,000 in cash. Now that positive cash and negative land keeps the accounting equation in balance because it's a positive and a negative, both in assets on the same side of the equal sign. Since I paid $20,000 for this land and I sold it for $20,000, I have no gain or loss to recognize. It's just an even exchange. Sold it for the price I bought it for. On October 1st, purchased $1,200 of supplies on account. So October 31st goes in for the date. Purchased $1,200 of supplies. That's on the asset side. And then on account. So accounts payable are also going up because now I have an obligation to pay that account payable sometime in the future. So a positive in accounts payable, a liability, a positive in supplies and asset on different sides of the equal sign, so the accounting equation stays in balance and goes up by the same amount on both sides of the equal sign. Now I'm down to December 31st. So generally we begin to see if these are operating transactions or if these are adjusting entries. So on December 31st, earned $75,000 of service revenue on account during the year. So now I have accounts receivable $75,000 because it says earned of service revenue on account. So I did this work on account for my customers, and so they're going to pay me sometime in the future. So that's plus $75,000 to accounts receivable. And if I go all the way over to retained earnings, over here, now this might be starting to break up for you. I'm going to pull this up a bit so it comes up above the picture of my head, and I hope you can see it. I don't see that as I'm speaking, so I'm doing this very much on the blind. But here's the 75 and here's the 75, and that's 75. This second one is in retained earnings. It's revenue, it's a positive, and it increases the wealth of the company. So a positive revenue and a positive receivable asset keeps the accounting equation in balance. The second one on December 31st, received $6,200 of cash collected from accounts receivable. So I'm going to put in 12/31 over here in the date column. Cash is going to go up by $6,200 because cash came in, and accounts receivable are going to go down by $6,200 because people paid me on their account. So now people owe me less and I have more cash. The accounting equation stays in balance because it's positive in cash and negative in receivables. The next transaction incurred $27,000 other operating expenses on account during the year. So now I put in the date 12/31, and I have $27,000 right here in payables that I have to pay, and I have $27,000 negative in retained earnings because I have other expenses that have gone up. But now the accounting equation is in balance because it's a negative on retained earnings and it's a positive on liabilities. Those are on the same side of the equal sign. So the accounting equation stays in balance. The next, December 31st, recognized accrued salary expense of $18,000. So up here I have $18,000 of expense as a negative in retained earnings, but I have $18,000 in salaries payable that I have an obligation to pay my employees when payday comes. So the positive payable and the negative expense of salaries keeps that equation in balance, a positive and a negative on the same side of the equal sign. The next, December 31st, had $100 of supplies on hand at the end of the period. So now I have $100 of supplies on hand. So I've got to remember my equation for supplies. I had zero beginning balance in supplies. I had plus $1,200 that I acquired during the year. So zero beginning balance plus the purchases of $1,200 gives me $1,200 available. At the end, I had $100 left over in supplies, so I must have used the other $1,100. So the transaction becomes negative $1,100 in supplies because they went down, and negative $1,100 in retained earnings, which I'm going to have to pull this up so you can see it. Negative $1,100 in retained earnings right over here. So those two negatives, one in the assets and one in the equity, keeps the accounting equation in balance. So supplies go down and equity goes down. Retained earnings goes down by $1,100. The land purchased on July 1 has a market value of $56,000. Well, that's good to know, but there's no entry because we don't change the value until it's realized through an exchange transaction. So while prices may be going up and down, they're not recognized. We do not put them in the balance sheet or in the accounts anywhere because they've not been realized. There's not been an outside transaction that made this happen. Now, there will be some moderate exceptions to that, but much later in the class. So for right now, we're going to go with the rule of if it's not realized through an outside transaction, we don't recognize it and there's no entry. And that's the footnote number 1 right over here, and it says no entry for the change of land. Okay, now then, the next one says recognized $120 of accrued interest revenue. So for accrued interest revenue, it says here at the bottom, this assumes that some of the cash was invested in an interest-bearing account. So I had $120 of received cash, so recognized $120 of accrued interest. So here is interest receivable is the asset over here, and down here is the $120 that goes into interest receivable, and then it's interest revenue right here. So we have $120 of interest revenue. Now what we have is, are there any other transactions that would have been going on by what we know in the regular transactions that have not been recognized? We have to stop and ask ourselves that question. And so we actually look over these transactions that have been occurring, and we say, this was done, and now could any of this been earned, or should it be recognized? That's the real question. So one of them we have here is the unearned revenue. We got $9,600 back here on 9/1, and on 9/1 we got $9,600 in advance as retainer for monthly during the next 8 months. So 96 divided by 8 months would be $1,200 a month, and we would have it for September, October, November, and December. That's 4 months. So 4 times 12 is $4,800. So we have $4,800 here of retained earnings that go, of unrecognized revenue that goes down because we can recognize it now and it is earned. And then we have $4,800 of recognized revenue. So I'm going to pull that up so you can see it. Sorry. $4,800 of revenue that we've earned for those 4 months, and $4,800 of our unearned revenues are going down. Our obligation is less by 4 months worth of earnings. So there's one transaction. Now, as we look at the one just above it, we've got this rent. And so as we look at the rent occurred on, I don't have that, let's see. Unexpired rent for $7,200. Oh, way back up on April. I'm sorry, I didn't catch that as I was reading right at the first. Paid $7,200 in advance for 1 year's lease of office space. So if I paid $7,200 for a year, I divide the $7,200 by 12, and I get $600 a month. And it was done in April. So if there's 12 months in the year and April is the 4th month, then I did not use it January, February, and March. So I did not use it for 3 months, but I must have used it for 9 months. So April, May, June, July, August, September, October, November, and December is 9 months. 9 months at 600 is $5,400. So I would have $5,400 in prepaid rent that's gone down. I don't have that rent asset anymore. I've used it up. It's been consumed. But I do have $5,400 of rent expense that I need to recognize because I've been in that building. I've been using the space. I've consumed the asset. So the $5,400 negative to retained earnings for expenses and the $5,400 negative to prepaid rent, the asset, keeps the equation in balance. Two negatives on different sides of the equal sign, so the equation came down by $5,400. So in these problems, you may get some of the adjusting entries presented to you, just like they were here. There were some presented to us so we could see them. And then there were some that we had to go back and look for ourselves. Now, when you're doing this new and you're not quite so familiar with it, if you recognize that we're doing something well in advance, you might just mark in your book, AE, adjusting entry, you expect it to happen, or put a dot or something so that you can get back to that. Now, if I had done that for my April 1st transaction, it wouldn't have taken me so long to get there. I actually had to look up at the worksheet and see when the transaction occurred originally to find that date. But that was only because I had the solution here. Now, when we're introducing ourselves to these problems, we're introducing ourselves to these transactions, that's the function of this introductory solution, is to show you how we recognize them. But that's kind of peaking. You won't, looking back, there would be hard to know just which one you had. But once you look at it, prepaid rent. So it may be presented to you either way. Don't let it confuse you. It may be confusing, but don't let it confuse you. And then just say, well, this is difficult. Dr. Fultz didn't remember that one right off either. I'm not going to remember them all. So I'm going to work until I find them. The ones that have time discussed in here, and we had an economic event because of the passage of time. So many months of rent, so many months of prepaid supplies, so many months of expenses, whatever it is. All right. The next thing we do in a worksheet like this is we total these. Now, again, this worksheet is presented to you, but if you had put this all on Excel, you would use the sum function here in cell 2. This would be 2 and a number, B column here. So it would be B25 or whatever it is. And you would use the sum function way up here at the top, and then you would tell it. It would ask you. You would probably have to drag it over all of this column, and then you'd press enter. The reason you'd have to do that is there's so many blank boxes down here at the bottom. It might not know just what you want it to add. So maybe only the bottom box would open up, and you'd have to pull it up there to see the whole thing. Since this is in Word, we're not getting it to, it wouldn't add for us anyway. But then if this were in Excel, I'd come down here to this little bottom, get that crosshairs, and pull this all the way across, and it would automatically add all of the columns for me. Remember that I sum these, I do enter, then I grab this at the little crosshairs and I drag it all the way across, and it would get all those summed for me. So now, as we look back at this sample solution, our introductory problem, assets, liabilities, and stockholders' equity, the accounts under the assets, under the liabilities, under the stockholders' equity, the dates, the beginning balances, all the way across, then enter the dates and the transactions, and then sum the total at the bottom. Now, this problem isn't quite over yet, because it's got quite a little laundry list of questions that I want you to be thinking about and recognizing that you could learn this information from these worksheets. Excuse me. Based on the preceding information, answer the following questions. All the questions pertain to the 2014 financial statements. Record the events in the general ledger accounts under an accounting equation before answering the questions. So they're warning you to be sure that you enter all of these and get these totals. You don't just set off trying to answer these. So, question A. what 2 additional adjusting entries need to be made at the end of the year? Well, we found those to be the accrued interest. We found it to be the prepaid rent, and we found it to be the unearned revenues. Well, they told us about, so it's the unearned revenues and the prepaid rent were the actual 2 additional ones. Excuse me. And the 120 they told us about in the initial instructions. So those are the 2 that had to be added. What amount would be reported for land in the balance sheet? So we come down here to the end, we look at the 55,000 for land, and it would be entered in the balance sheet. Now that's how we're going to, this is an illustration of how we would be using these. I'm going to do one more just to show you, then I'm going to move on to the rest of the solution. What amount of net cash flow from operating activities would be reported in the statement? Well, notice that we didn't do anything here with cash flow statement. So to answer that question, you would have to use this information and do a cash flow statement. So now I'm going to pull this worksheet down, and we have some answers here for you to look at. So the 2 transactions were the prepaid rent in September. The land was the 55,000. I showed you where to find that. Now C is going to be, I'm going to crank this up just, I hope I can get both of these. I think I can. So we have the 62,000 that came in revenues right here. And we have the 9,600 that came in. Let me get right here, minus the 7,200 in expenses and minus the 21,000 in expenses. So this is the formula for operating cash. So what were the operating activities? 4340. So that you learned in chapter 1, and you might have to go back and find those again, that equation again in chapter 1, and bring it forward. Or you might be able to look at some of the examples in chapter 2 where we still have the cash flows being calculated for you. In many of these pages in the book, we've still got the cash flows being addressed. And if you look, for example, on page 89, it's got cash flows and it's got investing activity, IA, right next to it. If you look on 88, it's got operating activities and net cash. And if you look at 89 again, it's got financing activities. So the book reminds you to identify what these amounts are. This problem didn't happen to ask us to do that in the worksheet, but what it did ask us to do is go back and pull the equation for operating activities and put it in for C. Now let's look at D. Turn the page. What amount of rent expense would be prepaid in the reported income statement? Rent expense would be reported in the income statement. Now, again, the rent expense is the amount that's over here in the expense column, and then the prepaid rent. So here's prepaid rent. It was 7,200, and of the 7,200 of the prepaid rent, 5,400 was transferred over to rent, and 1,800 was left in the prepaid rent account. So 7,200 is a mixed balance. It has both expense and asset in there, and we segregated the expense out and transferred it over to the income statement when we put it in the retained earnings column, and we left the 1,800 that's still an asset for next year in the asset account. So the answer is 5,400 is the amount of the expense. Excuse me, I have to look I want to look at the camera, I've got to look at the worksheet, I've got to read the book, so I have to look away just a minute. What amount of total liabilities would be reported in the balance sheet? Well, the total liabilities are going to be right over here in the liabilities section. So here's the liabilities section. We're going to pull that up so you can see it. There's 39,200, 18,000, and 4,800. So as we come down here, we do 39, 18, and 48, and that gives us the answer of 62. And of course, that's what we would expect to see for the total liabilities in the balance sheet. So we're beginning to look at some of the information that's in a worksheet and say, what would the answers be? And then we would be computing some of those amounts directly in a worksheet, in a financial statement, excuse me. So then the next one, what amount of supplies expense would be in the income statement? So supplies that were purchased was $1,200. It's right over here, $1,200. That became a mixed balance. We used some of it and some of it was left over. $1,100 was transferred out of the asset and over to the expense. So the expense is going to show $1,100 and the new asset is going to show $100 of the original $1,200 of supplies that we purchased. So supplies that we purchased became a mixed balance. Some of it we used and some of it we hadn't. We had to segregate it. The amount we used goes to the expense. The amount that's left over stays as an asset to benefit the future. The next question. What amount of unearned revenues would be reported on the balance sheet? Well, we're going to look at unearned revenues. $9,600 was the original amount, and that was the mixed balance. $4,800 had been earned. So $4,800 gets transferred over to the income statement as revenue, and $4,800, half of it, is left in the unearned revenues, and we would expect that to be reported in the balance sheet as a liability, an obligation that carries forward to next year. Okay, the next question. What amount of net cash flow from investing activities would be reported in the cash flow statement? So now investing activities is H, and as we come down here to H, we're looking for what amount was repaid and what amount was invested. So investing activity is going to be a negative $20,000. So let's go up and look at that. We have investing activities, and we invested $40,000 in land, and we sold $20,000 in land. So $40,000 invested in land, $20,000 sold of the land. We're going to end up with investing activities of $20,000. So as we look at that, we can begin to see that investing activities were a negative $20,000. $20,000 went out for land, $20,000 came in from the sale, but we still had paid out $20,000 net. So in this these two land transactions right there, we have H, $20,000 cash flow in, $40,000 cash flow out to buy the land, and so that gives us $20,000 negative investing activities. We invested $20,000 money in investing activities in that land. Now then, HI, what amount of total expense would be reported in the income statement? So what amount of total expenses? So we have all these expenses sitting over here. You want to be careful that you're not including the dividend in the expenses, but these other negatives are your expenses. So the dividend is up here way back on, we can't see that date right this minute, so that's on 6/1 we did that dividend, but these other negative amounts down here are expenses. So 27, 18, 1100, 5400. So let's go and see, that's I, and for I they have 27,000, 18,000, 1100, 5400 for 51,500. So then J, what amount of service revenue would be reported on the income statement? So now we're looking for service revenue and we're looking for the income up here in this statement. You can see why it's much easier to have these identified, and it's much easier to have the cash flow statement activities right next to it. That full effect worksheet is so much easier to use, but we don't have that in this problem, so we have to keep looking up and down. So the question is, what amount of service revenue? So now I'm looking for revenues, and I have this $75,000 that came in, and the 48 was service revenue, but the 120 was interest revenue, I believe. So let's go down here and see what they say. Revenues. Yes, the 75,000 and the 4,800 were service revenues, while the 120 was interest income that we had. So we served our customers to the total of $79,800 in total revenue. So the next question is K. What amount of cash flow from financing activities would be reported in the statement of cash flows? So there was $30,000 that we borrowed and $5,000 that we repaid, for a total of $25,000. So let's go up and see where those are. So when we look at $32,000 of accounts payable that we had, and then that we'd gotten from our customers, and then $5,000 that we repaid with our dividends right over here, giving money out to our stockholders. Then we get 25. I'm looking for the 30. Right here is the, oh yes, I'm sorry, I had that wrong. The $30,000 that they're referring to, I was thinking of the loan, but this isn't a loan. This was the common stock investors. So the common stock investors put in 30 and we paid them back 5 with the dividend. So the 30,000 in invested capital and the 5,000 in returned invested capital makes, and in the 5,000 return of the earned capital makes 25,000 of the cash flow from financing activities. Now, what amount of net income would be reported in the income statement? Now, in the income statement, it's going to be the $79,800, the amount we got from net income up here in J, right there, $79,800, and it's going to add the 120 that we earned from the interest income, but then it's going to subtract out I, which was our expenses, 51,500 of our expenses, so our net income is 28,420. So the earned revenue from services and the earned revenue from interest added together minus the expenses gives us our net income in this problem. Next is what amount of retained earnings would be reported on the balance sheet. So when we look at what amount of retained earnings would be reported on the balance sheet, we're going to, and this is an equation that I gave you last week in class, beginning retained earnings plus net income minus dividend equals ending retained earnings. So when we look at those, you want to, I remember going over this. This was page 14 and page 25 in chapter 1, and I was blending those together to show you how to do this calculation. You might have even had one of these on the test. I don't remember that, but beginning retained earnings plus net income minus dividend, that equaled ending retained earnings, and it's 71,420. So again, that's a number that you would calculate in the change in stockholders' equity. So now that brings us through a lot of sample transactions, a lot of sample analyses, pulls on information from Chapter 1 and Chapter 2, introduces us to these accruals that are coming, strengthens us in the entering of transactions out of Chapter 1. So strengthens a skill we already had from Chapter 1, adds a new skill of accruals, and then builds again on the statement analysis. What would we be showing in financial statements, income statement, statement of change in owner's equity, balance sheet, statement of cash flows. And many of these calculations were calculations we would actually do in those statements. So I hope this gives you a good introduction to Chapter 2. My assumption is, of course, that you would have read Chapter 2 first. You would have taken down those notes of what were the economic events that were happening. Do I understand those? What were the formulas that would be matching to that economic activity? And then how would I enter those onto the worksheet? And then listened to the video on the overview of Chapter 2, and then come to this problem and listened to the review of how this works as instruction on accruals and instruction on entering transactions and instruction on financial statements. There's one video remaining for you, and that's the video on the comprehensive problem. I hope you find these videos helpful and help you to get your work done for the class. If you have any questions on this problem, I welcome you sending me an email or for the ground class, coming to class and bringing it in. I welcome you coming to my office hours if that helps you to go over this information. And I encourage you to, in some of these questions that even I got mixed up on because I forgot about selling that stock, if you have these, the best thing to do is to go back to the sample equation and say, now what did they say this was? They said this was the investing activity, this was the financing activity, and then have that ready for you. If I had gone back and looked at the stock one, well, actually I only had to look at the stock one to know that it was, but I could have refreshed my memory using the samples in the Chapter 1 and in Chapter 2. Well, I hope you find this helpful. Come and see me, and I look forward to working with you the rest of this week. Goodbye.